Hello everyone, welcome back to Chill Trades, where I analyze stocks so you know what's going on. Today we're going to be covering Alibaba. It's been a few weeks since I covered it, and I thought an update video both on what's been happening in the news as well as technical chart analysis of Alibaba would be a great video for today. So I hope you guys like the content. Please like, subscribe, and I want to know if you're holding Alibaba, and if you are, why, and if you're not, why. But first I want to jump into, obviously there's been so much chaos in Asia lately. So much happening with, Evergrande kind of starting to default on debt. Basically the biggest player in building real estate in China is having a big issue, and that's obviously going to have impacts on the overall economy. So really, how's that going to impact, Alibaba? But first thing I want to look at, this is just a great article. Forget the bearish rumors. Alibaba's a great long-term buy. I agree. I actually finally bought into Alibaba, and that's kind of why I wanted to make this video as well. I'm not a financial advisor though, so don't follow my advice, just education. But the main thing is, even though Alibaba's down a ton, but when we really look at their numbers, they're still having amazing expectations. So like commerce revenue growth increased 35% in most recent quarter. So in all the drama, they're still growing. Total revenue grew 34%. For essentially one of the largest e-commerce companies in the world, for them to still be growing at 30% is pretty ridiculous. Those are really insane numbers. And even on the bottom line, operational income, so EBITDA, slight decrease, but there's a lot of other things going on. Logistics, fines from the government, things like that had a really big impact. Alibaba said they're going to buy back a bunch of shares, which is a big deal recently. Another big deal, I couldn't find the article. If you find the article, please put it in the description. But I even saw news that Alibaba is going to start sharing data with the CCP, which is actually a big win for Alibaba. They need to just, suck it up and work with the CCP. And that's only going to benefit them. So there's a lot of pros on this. Does it mean that Alibaba's at a bottom? It doesn't mean they're at a bottom, but there's still a lot of positivities that we need to keep an eye on for Alibaba. And kind of to going off that as well, when we look at their numbers, so these are analyst expectation. When we look at their numbers, so obviously, let me break this down to 2019 because this chart's a little overwhelming for everyone. But where's the beginning of 19? There it is. Okay, so really when we look at, so moving forward, 630, 9, they're still expecting growth. So what's really important is that we're seeing this trajectory in their revenue growth, and analysts still expect revenue to grow like this, which is good. Obviously, it's starting to not be as intense of a increase quarter over quarter and year over year, but it's still growing. And we can see these numbers when we look back at 2018 or 2019. Let me actually extend this. When we look at 2018, look at the growth from 2018 to 2020. 2018, 2019, we see 60%, 50%, 40%. And now Alibaba is getting to the place where we see 30% and 20%, depending on the quarter. This last, this year moving forward, besides 3/3/21, 30%, 30%, 20%, 25%, 20%. So growth is slowing, but for a company this big, they're still growing substantially. Outside of that, a couple things we do want to keep an eye on. So I think a really important, that's not the article I wanted. So something to keep an eye on is the Evergrande and the impact it has on on economic growth, because we don't know if, people in China who own homes, did their equity get wiped out in this, this crash is happening? And if so, that's going to hurt the consumer purchasing power. And so when we look at these numbers and these really large expectations, are these expectations going to be downgraded? That's, I would say, the biggest concern with Evergrande is what impact, if we do see softening in the economy overall in China, what impact will that have on Alibaba's revenue? So that's the big question that we don't know yet. But overall, same sentiment. They're still growing at 20, 30% a year, which is pretty astonishing for a company this big. I do want to go down to something that we want to keep our eye on, which is net income. This is always something to know because it's obviously a company having a lot of revenue is awesome, but we really want to get down and see how much money they're actually making. So when we look at net income, the main thing I want to call out here is obviously 2020 was an amazing year for a lot of companies. Obviously Alibaba had a little bit more drama in this, but the main thing to call out in 2020, see all this red here? This means that their net income is smaller than the year prior. So they're making more money in terms of revenue, but they're grossing less, which is not a good sign. So that's the only red flag there, I would say, moving forward. Obviously, it's not the largest numbers, 5% smaller, 8% smaller. Really interesting for Christmas, they're expecting a 41% decrease, which is a really interesting point. But when we go into 2022, we are seeing quite a big a lift off again. But that was honestly partly due to all the drama in early 2021 with fines and such. But that's something we want to pay attention to moving forward. How's our revenue going to be impacted by the housing crisis? And also how's our net income going to be impacted by, Alibaba having to give a bunch of money for common prosperity and more fines potentially happening. So those are all things we want to keep on our radar. But when it comes to, this common prosperity and Alibaba saying they're going to give 15 billion, it's really not that big of a deal. Obviously, when you say 15 billion, you're like, oh my gosh, that's terrible. But let's really break down what that means. So when we look in the numbers, 15 billion is a lot of money, even for a company Alibaba size, along with the fines. But I don't think it says it here. This is like a 10-year process. This is not happening overnight. They're not just going to give 15 billion to the CCP or to help smaller companies. This is over a long time frame. When we look at Alibaba's numbers, net income 45 billion. I think that's billion, or maybe that's 45 million. That might be billion. All that being said, they make a ton of cash. They make a ton of money. 15 billion is not that really big of a deal for Alibaba. So that's all I want to cover on that part. We covered this news. We covered this news. The last thing I want to get to is just institutions. So the first thing I want to call out, I've said this in all my past videos, a lot of selling. We already know this is happening, but what's been happening lately is what we want to keep an eye on. And really what I'm not seeing a ton of new positions. So new positions is typically when it says NA, someone's jumping for the first time, but I see a lot of rebalancing. So I'm seeing a lot of green, which is good. We're still seeing some big sell. A lot of people are still exiting positions, 98% exit, 83% exit. So really when you think about institutions are really the lifeblood of a company's long-term success. If you don't have institutions, it won't be successful in the long term. And we're still not seeing institutions really buy in on this large dip yet. I think it's a little too risky still for hedge funds and institutions. And so this is just something to know. It doesn't mean you can't start buying now, but knowing that institutions aren't buying in yet, which could signal that we're not quite at a bottom yet. And just to further that point, when we look here, a couple new positions recently, pretty small though. When you see kind of this no red or no green, it just means rebalancing. People are rebalancing their positions, which is something we really need to keep an eye on. If we get to a point where we start seeing a lot of green happening, this is a really good sign of, okay, we need to start considering maybe increasing the position we have in Alibaba because institutions are really stepping in and saying this is finally a time to buy. But those are a couple things on that end. Now I want to get to the charts because that's probably what all you guys are waiting for. But it's important to cover everything about a company. I'm really curious what you think about Alibaba. But the first thing I want to bring up is the last video I made, it was at 153. I told you guys it was oversold in the daily significantly. It's going to bounce. Oversold in the weekly. It's going to bounce, and look what happened. It bounced to the 170, 180 range. I told you could have made money there, but now we're in a downtrend again. And so I bought at 150 personally, or 149, whatever it was, and I only bought one share, guys. When you think about, there's a lot of risk investing in China and Asia, and we've learned that over this last year with all the volatility. And you really don't want to allocate much of your portfolio. Say your portfolio is $1,000. Well, this is a $200 share. So say your portfolio is $10,000. You might want to allocate 10%. That's all you might want to allocate in Asia. Obviously with the US market pretty overvalued, maybe you push that to 15 to 20%. but you really don't want the bulk of your portfolio if you're a US citizen, and maybe in Asia and that's all you're investing in. But if you're in the US, you really don't want to go over probably 20% of your portfolio. It's just too risky. And so that's the first thing I'll say there. But really breaking down the charts, I personally see there could be more downside. I tried to put out a 5-wave Elliott wave, and this is kind of what I got here. So I think, you know, this was a long 3-wave here, and I talked about it in my last video. The 3-wave needs to be longer than the first wave, and that's why I thought this was a 3rd wave. If it was 1, 2, 3, 4, 5, that didn't really make sense to me, and so I still think we're finishing out the 5th wave and doing that. The 3rd wave was right here from my standards. I still think we could have some more downside. So when we look in the future, you know, by doing some charting, where could the bottom potentially be? Get my face out of the way of the chart. So we kind of have this descending triangle here. You know, it's kind of going in. Do I think we'll go down to 63 bucks? That's highly unlikely, but you know, maybe let's draw a couple more lines to not freak you out too much. That's definitely not, I don't think 140 is going to be the bottom either, but I don't think we're going to 63 bucks. Don't get feared by the bottom of that. But the main reason I draw that is to figure out where our support lines are. And so we see we have a really big support here. So we could be a 5th wave right now, and this could be the bottom. That's a scenario, and that's why I bought here. And I bought just a little bit, 1 share. I'll be adding more shares as we go lower if that's the case. If it does seem like a bottom here, then maybe I'll buy on the upside. But I don't. That's not my, when I do the technical analysis, that's not what I think's going on. But when we look at supports, we have really big support at 130. So maybe that's the next range for the 5th wave. You know, 5th waves honestly don't always have to be that long or that big, honestly. So maybe that's the range. We also have pretty big significant support from back 2014 at 120. So 130 to 120 is a range that I'm looking at. You know, if we continue to see like economic collapse because of growth slowing and a lot of debt in China, maybe it can go lower. But as we potentially move lower here, if that's the case and we stay inside of this descending triangle that I'm talking about, now I need to get rid of this green line. These are areas I'm looking at, that 130 to 120 range. And if it gets there, guess what? I'm just going to be averaging down and buying a couple more shares. And like I said, I don't want my portfolio to be over about 10% exposure to China. 10 to 20%, you know, 15%, maybe 20% if the US equities just get way too expensive. But that's kind of the range I'm looking at. If it does somehow break lower, you know, we're looking probably around the $100 range. And I'd be very surprised if it goes below 100. You never know what could happen. But those are a couple ranges to look at. And I just wanted to cover long term because we really want to think as Alibaba as a long-term play. With this down, how far is it down? Let me see if I can find that price range. Let's see if this is the right indicator. You know, we're down 53% from the top. That's a long ways. Doesn't mean we can't go down more. You know, when we have really big bear markets and with all the craziness that's happening in China, things can go down 60, 70, 80, 90%. That's not unrealistic. And so just because we've gone down 60%, 50%, 55%-ish doesn't mean we're at the bottom. We could still go lower. RSI, it just looks like it kind of wants to hang out here going sideways, you know, on the weekly. Obviously, we're oversold, but stocks can stay down here for a while. You know, we go back here, August, September, that was a month down there. Here, October to December, that was like 5 months in that zone, or 4 months in that zone. And so things can stay down here for a while, and everything technically doesn't say we're ready to reverse. Maybe we're putting in that 5th wave bottom. Maybe we have one more leg down. MACD, obviously it's still decelerating to the downside. The 20 moving average still decelerating very significantly to the downside. So all these things aren't telling us it's ready to go all in Alibaba, but we're at a range where start buying a share here. Maybe buy 2 shares depending on how big your portfolio is and the position you want to get to. So say I want to get to $1,000 in Alibaba. That's roughly what, 5, 6, 7 shares. So I'll buy a share here. If it goes down 10, 15%, I'll buy another share. If it starts buying out there, maybe I'll buy a 2nd share, 3rd share. You want to average into your positions, especially when something's volatile and there's a lot of uncertainty. But that's all I have for you guys. I really hope you enjoyed that. Please like, subscribe, comment. I love to hear what you guys think. And if you made it this far, join the Discord. It's in the description. I stream every Saturday on Twitch talking about the stock market, so join that. Appreciate you guys so much.